Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. Gang and non-gang members, thank you for joining me today. A couple things I want to go over. First, I think what would be helpful for you to understand is what happens when you get a rate hike, what happens when you get a rate cut, and when there's no change like today. So let's start out with the no change like today. Market freezes, you can see that right now, until Powell speaks, and that's what he's doing now. That's normally, but what if you get a rate cut? Well, if you get a rate cut, remember, yields will collapse. The 10-year Treasury that's going on, it will collapse. And that will take your tech and AI stocks and move them higher. But banks will tank. Metals will surge. Now, what if there's a rate hike? What happens then? Well, if the rate hikes, then everybody dumps tech, banks pop for a minute, and then gold really takes off, and the banks pop for a minute, but then again, by the end of the day, they'll be back down. Okay, so and this is typical, and this is what you can count on every time when there's a rate hike, rate cut, or no change. So then, because most people ask, well, what do you do if there's a rate cut? So I thought that was helpful. All right. The other thing is, I think would help you to understand too, is that earnings. I always talk about this because I can't stand the jibber jabbers on TV who totally BS us. Now, earnings are not about the number. They're about expectations. It's all expectation. Wall Street doesn't give a hoot about whether a company made $2 or $2.10, whether the revenue's up 5 or 7%. They pretend they do, but they don't care. What moves the market up is expectations. Now, if expectations were low and a company beats, the stocks go up. Now, even if the actual earnings are bad, if expectations were high, then the company misses, the stocks drop. Now, even if the actual earnings were good, if the company beats earnings but guides lower, so this is important. So if you have good earnings, they came out really good, and the company beat its earnings, they always beat because they set their own earnings. But if the guidance is low, the stock will drop, no matter how much they beat earnings, no matter how good they are. And again, guidance, okay, is much more important than the stock's number. They don't care. If the company misses earnings but guides higher, stocks will rally. So a company can miss its earnings totally, and all of a sudden the stock goes up because the guidance drives which way the stock goes, not the earnings. So you have to understand how the market works, and that's one of the things the market does. And they just total BS everybody with that. Now, the other thing is, and I think I still have it. Okay. Now, before I dive into everything, yeah, I think I already gave you that. Let me see. No, I didn't. Here it is. Okay. So, publicly, Wall Street takes everything bullish. It pushes optimism. You'll hear them say all the time, the consumer's strong. Earnings are rock solid. Looks good. The economy is resilient. That's optimism. And the reason why they push optimism is to keep the retail investor stock money in the stock market. They don't want you taking your money out. Now, so they'll lie to you. So even though, I mean, they'll be optimistic just to keep the retail investor money in, and they don't want customers call and say, gee, what do you think? What should I do? Should I buy this? Should I move it here? They don't want that. So they always talk optimism. Now remember, Wall Street and CNBC, Wall Street and Fox Business are one. They're married together, okay? Because that's where most of their advertising revenue comes from. So, and there's a big, I mean, the advertising revenue, okay, that Fox gets and CNBC gets, a lot of it is from the brokerage houses, okay? So, and then cost auto manufacturers. So what happens is you'll hear them talk optimistic, and but behind the scenes, as they're telling you, the consumer is strong, earnings are good, the economy is resilient. Behind the scenes, they're rotating out of sectors. That's why you got to follow the money and not the noise. So while they're telling you everything is good and they're lying to you, they're rotating their money out of sectors that you should be rotating out, but they don't want you to rotate out because let's say with the banking sector would go down. They want to get their money out first, and they want to get the institutional money out. Remember, all the big brokerage houses on Wall Street, they make all their money from unions, from pensions. So they got to take care of them. So they're always going to push optimism so you don't take your money out. And behind the scenes, as the big brokerage houses are dumping all the stocks they own, they're dumping the stocks that their pension funds have so they can get them clean, get them out clean. So they rotate out quietly, and they also are buying protection. They'll buy gold and silver. And so, and they always sell into strength. Remember, I always tell my gang members, when you get a big day like an MU, you get a big gap up in MU, or gold, you get a big gap, sell into it. Take profits. Don't get out. I'm not saying get out, but take profits. Never when you get a big move in the morning do you ever go in and buy it. That's what FOMOs do. And that's why FOMOs are part of the 93% of people who never make money in the market. Now, earnings are not about, as I said, numbers. They're about the expectations, okay? And that's what you got to look for. Now, let's get back to what I wanted to talk about today. But I thought I'd bring that up because I think, I mean, people really listen to CNBC and Fox Business, and they're all full of crap. So, all right. So today, let's talk about why silver is up 200% and gold is up 80%. Gold is like the piker. Why? Because this is all about demand. That's what's going on with gold and silver. It's all about demand, okay? And what they don't want to tell you, again, Wall Street, they want to be optimistic. They don't want to tell you there's a big supply squeeze right now. And they're not going to tell you that. We have such demand, such tight supply, which equals price explosion. But the demand is incredible, because think of it. Where do they need their silver? Solar, electric cars, and the AI data center. All the components that go in here just loaded with silver. Medical, industrial. Now let's talk about the data centers, because the data centers consume massive amount of silver. Massive amount of silver. They're at record levels. And we're also, there's such demand, and we have very, very low supply, but they're not going to tell you that because people would start hoarding silver, hoarding gold, and then that hurts their commission. Remember, they live on commission, so they want you, keep burning you and churning you, right? They don't want you to hold, so they're not going to tell you how that we have a serious, serious situation, especially in silver. Very bad, okay? There's just very little inventory. So metals, again, here's another thing why silver and gold is exploding, but especially silver. Because no longer is the metals, gold and silver, just for the very, very wealthy, the top 100% or the top 10%. Those days are gone. So ever since they introduced fractional buying, and this is all why we got this big boom, because Now, the top 10% was the only ones that used to buy, and the top 1/100th of 1%. The top 1/100%, they make a minimum of $2 million a year income. So, but the fractional buying opened the door for the middle 40%, for the lower 50%, because of fraction buying, they now are buying gold and silver. So the result is gold supply is really flat, man. They don't have much gold, okay? And silver, as like I said, is much worse, okay? Very severe, the amount of silver they have. But they're not going to tell you that. So again, it's these data centers that are consuming massive amount of silver. And that's what the real problem, because again, remember, the data center, silver is the best, for all these data centers, the silver they use is because it's the best electrical conduit on Earth. Silver is. And so, and again, AI isn't just, you got to think about AI now, it's no longer a tech story. It's a metal story. So that's why you see gold, MU keep going up, and gold keep going up, and silver going up. MU is the only supplier of memory. And they just announced the other day they're going to spend, what, $400 million on another data center they're building? So that's why we just don't have enough silver to keep up. So that's why if someone said, well, you think there's going to be a crash? No, I don't think there's going to be a crash. I think we're going to be on this run for quite a while. But also remember, the market always does what it's supposed to do, but never when it's supposed to do it. So you never follow the nonsense. Don't follow the jibber jabbers on TV. Don't follow the jibber jabbers on all these, especially podcasted jibber jabbers. Oh my God, they're getting worse and worse. Anybody can now have their own radio show called broadcast, and there's no barrier to get in. Anybody can be an expert. And when I was on radio, as I said before, there's two things you can do. You can go get syndicated, which everybody wants to syndicate me. That means they'll put you on 400 or 500 stations, but you get a salary. That's it. You get a small salary. And a lot of people do that because they're not entrepreneurs. They want that check every week. And when I started my business, you eat bread and onions for a long time. You suffer for a long time till you build the business, any business. So when I was in Tampa or Sarasota or Dallas or San Diego, whatever, there'd be like 5 of us. That's it. And we were on all those same networks around the country. But now a person goes to podcast, there's hundreds and hundreds of experts. So the bottom line is you're not getting good information today. So just always follow the money. And remember, the central banks, they're diversifying away from the dollar. Central banks are going to keep accumulating. They're going to, and the good thing about them is they put a floor in for the price of gold and silver. And the weak dollar, remember, makes gold and silver cheaper for all the Europeans who are buying like crazy. So for anyone to tell you that gold and silver is going to collapse like what happened during the dot-com days, it's not going to. One day it will, just like MU one day will. When an MU also starts getting competition, they start taking away some of their market share, okay, in memory. They're the only ones that can sell it. Yeah, they'll crack too. But for now, when you get somebody says, "Oh, gold and silver's got to blow up," no, because gold and silver has always been speculative. Gold and silver now. I don't know if you remember. You go back to the '60s. The brothers, I can't remember their brothers. Their name of 2 brothers. The Hunt brothers. They captured the whole silver market, and everybody was speculating. And finally, it collapsed. They went broke. This is not that. This is not speculation. This is grounded into, especially silver. Why silver is so much higher than gold? Because silver is so tight with the AI world right now. The AI world can't live without silver. So that's why, again, silver is so much higher than gold. Both are good. Both are great stocks to trade. And again, always follow the money. We'll show you how to do it. Don't follow the jibber jabbers. You'll get screwed. Thank you for listening. philsgang.com.